let's talk about buying assets while there's a bunch of hype behind it. We see a lot of things just going parabolic in price today. A lot of different assets. We're getting all this money printed, which leads to a lot of growth in a lot of different stocks, things like that. You get a big boom in real estate when they're printing this much money, and they're not allowed to foreclose on homes or anything like that. So I kind of take that as a sign of when prices go up, I tend to see that as a sign of it's getting expensive now. Might not be the time to buy it. I might hold off and wait for the price to drop, things like that. But I'm getting a lot of comments and stuff saying the hype is real, hype train continues, better buy now. I just don't get that attitude towards the price goes up and now we want to buy it. I've always been a buy low, sell high. I think it's funny because there's the attitude, like when I made my video on mentioning that I've sold, there's a few different comments around and stuff like that after that, they're shaking out a weak hand, things like that, but it's, hey, I've over doubled my money on, if you take some of the silver that I was buying when I bought most of it below $18 US and I sold at $38 US, that's over doubling your money. There's nothing wrong with doubling your money, taking some chips off the table, let's say, and saying, hey, we gotta rebalance. We need to take some of this asset and move it over there. This asset's performed better than that asset. Well, let's take some chips off the table here, move it over there, and maintain a balanced portfolio. That's kind of my attitude towards everything. When things go up, that's when you might want to start taking some chips off the table, rebalancing, and when everything that goes up must come down too. Maybe not in price, but it could be in value. It'll be a weird time to measure if things are expensive or cheap with all the money printing that's been happening this past little bit, at least in my personal opinion. Not a financial advisor, just a random guy on the internet, so do your own research. I'm just explaining my story on why I'm doing what I'm doing. It's real hard to find any stocks or anything single digit price to earnings now. I'm starting to see 12 as a good deal for price to earnings. Like 12 or less, that's not really where I'm used to buying, but I also want to keep some kind of balance in the portfolio. I can't just neglect not buy stocks. That's kind of my attitude. I do believe time in the market beats timing the market, because when I started really getting some red flags about the valuations in 2019, things crashed and went way up and everything since then, and if you're just to hold the dividends and stuff, let's say you're getting a 5-6% yield, like you would have gotten investing in the Canadian banks back then. You've been getting like a 6+% yield on some of those. 5+%. To me, that adds up, because you get that every quarter, not just once a year. So you get to compound it every quarter, not just every year. It really does add up. But then you have to think about how much cheaper you're looking at everything dropping by then. Yeah, it might not feel good to see everything crash in a week or something like that, but if you just hold it through and everything like that, kind of my attitude, as long as the earnings are there, as long as their plan is there, as they've got a solid company, they're well capitalized. I feel like buying above 10, I might start to do that just to keep balance in my portfolio. Plus, I do like the yields. Right now, I'm anticipating a crash, but I can't put all my eggs in one basket. That's kind of like why I vault and have some in a safe and things like that. I can't keep all my eggs in one basket. That's just kind of my attitude in life. It's a saying that is there for a reason. But yeah, it's kind of my thoughts and opinions on what I've been seeing lately, and some people saying, oh, this asset's catching headlines or something. It's just moved up this much. Can you believe how expensive it is? I'm just gonna buy a bunch more. When people are saying I can't believe how expensive something is, it might be a good time to take some of those chips off the table and move it somewhere else. You don't need to hold it in cash the entire time, but you can take some chips off the table, put it somewhere else, and just reduce that risk, maintain balance in your portfolio, and that's just kind of my strategy personally to be making good money every single year, be investing. It's worked out. I'm not gonna claim that I'm a Warren Buffett or anything like that, but I'm very happy with my returns. I'm very happy with my plan, I'm very happy with the execution, and maintaining a balanced portfolio really is. The one thing I'm really missing is bonds, but I just don't see buying bonds right now when I'm anticipating yields going higher. I don't see the risk-reward ratio being there. Just my thoughts and opinions though. And if I were to buy a bond now, the yields are basically nothing. You're not going to get capital gains because it can't really go down much. And when we're anticipating yields going up to reduce the effects of inflation near term, that's going to really reduce the value of my bond. Yields go up, price goes down. So your bond now needs to go down in value to compensate for the increase of yield that you would get if you were to buy a new one. That's just kind of the way it works. But yeah, please like, share, subscribe, stay positive. See you next time. And I'd love to know your thoughts and opinions down below, so please comment down below. Thanks. Bye.